This is the FFR Trading Market Minute, and this is a daily candlestick chart of the SPY, the ETF for the S&P 500 that we've been tracking week to week. And I drew a little circle around the candle that closed on Wednesday, the last time we did the update. And the scenarios that I gave, I was expecting the market may get another day of rally. This was into the Fed meeting on interest rates. They left interest rates alone and didn't threaten to raise again. So I guess the market took the more bullish scenario, which I thought was going to be the least likely scenario. I initially thought they would have another day rally. We'd be overbought here, and then they'd look to begin to pull back again. But the less likely scenario I pointed out is, or best case scenario for the bulls, was that they would continue to rally and retest the neckline from this, again, head and shoulders pattern that we've been watching. This down move, again, they almost came to the target, just a few dollars away from hitting that head and shoulders technical target. But they did rally, retest the neckline here. It looks like the market has just opened here on Thursday, and they've just about filled this gap back here. That's another resistance level, if you will. So as these gaps fill, the tendency is you get a rejection at that point. The next resistance level will be this little resistance level that I've drawn on the chart here to the upside. Now, we are overbought for sure. We're living on borrowed time. We should be having at least a couple days pullback before, if the bulls can muster another run. We should get another couple days of pullback here. We'll see. So expect a pullback here shortly. Now that this gap is filled, best case, maybe they get up to this level before that pullback happens. But again, we're living on borrowed time here. We should get a pullback. We do have some unfilled gaps below the market here. Again, these gaps tend to fill about 80% of the time. So target to the downside would be a gap fill back to this level here. And below that, another gap fill here. And you've got some support at that point. Now, here's just a quick look at the monthly chart. Just to point out, remember our analysis prior was because we had made those lows back in October of 2022, and the market rallied. It rallied beyond the 50% retracement to the 618 retracement, closed above there. And at that point, I said the likelihood of us retesting these lows is very, very low now. Right, so we did get overextended. You see the oscillator overbought here on the monthly chart, and we started to pull back again. But we'll see now if the bulls can take control, get another push up. But again, I think the least likely scenario would be to retest these lows because the market has recovered that 618 retracement from this crash. Some of the important economic data next week: Tuesday's Consumer Price Index and Wednesday's Producer Price Index, retail sales as well at 9:30. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.